Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a company tries to juggle loans, interest rates, and a dash of economic uncertainty? Well, today we are diving into Home Bancorp's latest 10K filing to find out if they stuck the landing or face planted. Let's get started. This report covers the fiscal year that ended in December. It's basically their yearly checkup where they lay out all their financial details, and it's our job to break it all down. First, let's talk about how much the company is worth. As of June last year, the value of Home Bancorp stock held by the public was around $293.04 million. This gives you a snapshot of investor confidence and the overall market perception. Now, keep in mind that as of March this year, they had about 8 million shares of common stock floating around. This number is important for calculating earnings per share, which tells us how profitable the company is on a per share basis. So what does Home Bancorp actually do? They are a bank holding company, which means they own banks. Their main game is taking in deposits from people and businesses, and then using that money to make loans and invest in securities. Think of it as a financial merry-go-round. Money in, money goes around, and hopefully more money comes out. They've got 43 banking offices scattered around South Louisiana, Mississippi, and Texas. They operate under the name Home Bank. As of the end of 2024, they have 471 full-time employees and 10 part-timers. They emphasize employee training and promoting from within. As a public company, Home Bancorp has to follow certain government rules. They are regulated by the Federal Reserve, the Office of the Comptroller of the Currency, and the FDIC. Let's talk about some things that could throw them off course. The company faces risks like economic ups and downs, competition, and changes in interest rates. Events like wars or terrorism and changes in regulations also affect their business. A significant portion of their lending is in commercial real estate loans, which can be riskier than residential loans. If the economy weakens, it could lead to borrowers defaulting. This could negatively affect their finances. They set aside money to cover potential loan losses, and if those losses are higher than expected, it could hurt their profits. In fact, a big part of the financial world is trying to figure out if their allowance for loan losses is big enough. Our ability to adequately conduct and grow our business growth, like all banks, they depend on computers and networks to run things, making them vulnerable to cyber attacks and technical failures. One error or major service denial could really cause problems. Now let's jump into the real numbers. For 2024, Home Bancorp's net income was $36.4 million or $4.55 earnings per share, which is lower than the $40.2 million they made the year before, so they took a small step back. Here are some key figures from their balance sheet. Their assets are around $13.4 billion, up from the previous year. They have about $98.5 million in cash. Their loans make up $2.7 billion. Their net interest income, which is the profit they make from loans compared to what they pay out for deposits, was $120.4, down from $120.24, down from $127 million the year before, so slightly smaller profit this year. Their allowance for credit losses, that safety net for bad loans, is at $35.6 million portfolio. This means that about 1.31% of that will be lost. They also make money from fees, what they call non-interest income, which was $14.6 million before. Costs related to running the business, such as employee pay and data processing, went up from $82.8 million to $87.3 million. Looking at their loan portfolio, the biggest chunk consists of commercial real estate loans, making up about 43% of all loans. They also do a lot of construction and land loans, so these are their primary markets. Loans with fixed interest rates make up $1.3 billion of their total portfolio, so about 50% of their total loans. Diving deeper into the majority of the allowance for loan losses is allocated to commercial real estate. And then for the 1 to 4 family first mortgage, it tells where the company sees the greatest risks. They also have about 0.5% of their loans that are not accruing interest, meaning they aren't making money on those. The higher this percentage, the more trouble the company is facing. It is also worth nothing that total commercial real estate loans represent 300% or more of the bank's total regulatory capital. The company needs to be careful to have good risk management practices in case something happens to the real estate market. They have goodwill of $81.5 million on their books. goodwill isn't something you can touch. It represents the value of things like brand reputation and customer relationships they got from past acquisitions. If this goodwill suddenly becomes less valuable, they might have to write it down, impacting earnings, the fair value of securities in our portfolio, and can cause potential adverse changes as of December 31, 2024. They had $30 million of accumulated other comprehensive losses. This was from holding securities. They recognize the fair value of the investment securities can fluctuate due to factors outside of their control. The ability of these assumptions to be correct is key and can have a big effect on how we see the company. Finally, the bank exceeded all of its regulatory capital requirements. Any bank that does not meet these levels is at risk of being closed or sanctioned by regulators. A quick peek at their stock performance: an investment of $100 in Home Bancorp at the end of 2019 would be worth around $135 by the end of 2024. The graph in the filing shows that they are generally similar to the S&P US small cap banks. The company utilizes a number of cybersecurity risk managements, but have stated that cybersecurity threats have not materially affected the company, its business strategy, results of operations, or financial condition. This incident response plan is coordinated through the Director of Information Security to monitor possible security breaches due to several other banks facing financial challenges. Any future special assessments, increases in assessment rates, or required prepayments in FDIC insurance premiums would reduce their profitability. The financial statements of the registrant included in the filing reflect the correction of an error to previously issued financial statements. Home Bancorp refers to portions of the definitive proxy statement for the 2025 annual meeting of shareholders to items related to directors, executive officers, fees, compensation, related transactions. This information will be found there and was not filed with this report. Finally, we had the opinion from the independent auditor who stated that the company maintained effective internal control over financial reporting. One area of note for the auditor was the estimate of the allowance for loan losses, as the selection of qualitative factor adjustments, including reasonable and supportable forecasts, which are used to adjust the quantitative historical losses, are subjective and could have a significant impact on the allowance for loan losses. So what's the verdict? Home Bancorp seems to be navigating a complex economic landscape. While profits are down slightly, they are maintaining solid financial footing with good capital levels and efforts to manage risks carefully. However, they are not immune to things like economic conditions, so this is all subject to change. Despite all this, remember that the numbers that we see are generally massaged and smoothed out. It's difficult to see underneath the report without understanding their long-term goals and business decisions. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, don't forget to like, comment, and subscribe for more financial deep dives. What company would you like to see analyzed next? Let me know in the comments, and until next time, stay informed.